some of the country's largest pension and insurance funds may be forced to take a haircut after rating agencies downgraded IL&FS Financial Services to junk. This comes at a time when parent IL&FS has already defaulted to debt repayments to some of its creditors. Sajeet Mangat's now here for more. Now, Sajeet, put this into perspective for us. We've been talking about this for the last 3 days. What are the latest developments and what do they mean for some of the asset holders?
So, you need to look at it from a larger perspective of what IL&FS does. Actually, it does a lot of financing work for the infrastructure space through various subsidiaries and SPVs. And if you look at the total group as such, they have 25 direct companies and more than 100 indirect companies which are there, because every project has a different SPV, and that's the reason why it's a huge group. From a group level, it has a total debt of 91,000 crores. That's a huge exposure to the banking and the financial system. On an individual level, it has nearly 16,500 crores of debt. A large chunk of that is in non-convertible debentures, because it's a very active player in the financial market. So banking is not that much in the exposure is not that much, as compared to others, because nearly 40 to 50% of it is through public markets. The funding that happens, and short term and 1 to 2 years. That's a frame. Let's go one by one. Standalone, 16,500 crores, a large chunk, nearly 60% in NCDs, which are with a clutch of insurance and pension funds. Now these are some of the biggest names. NPS Trust, which is National Pension Scheme, which has nearly 665 crores. You have the EPFO, which has nearly 575 crores. LIC has a 540 crore exposure. Now LIC is also the largest stakeholder in IL&FS as well. Postal Life Insurance. So these are the some of the institutions which hold those debt paper, and as per regulation, they are supposed to hold any paper above AA. Now the rating of these papers have been brought down to BB, which is non-investment grade. Now some would argue that's a junk. If you speak to those companies, they will say no, there's a difference between junk and non-investment grade. But the fact is that they are not supposed to hold these paper now. And we've been speaking to regulators, like whether the pension regulator or the insurance regulator, and they are very clear on one fact, that they have to reduce this exposure at the earliest. These are some of the illiquid NCDs, so they will have to do it over a period of time. But in the meantime, they will have to take a charge on the loss of valuation of these papers, so that and that will be a hit on many of their P&L. You have some of the listed companies like GIC, which is listed, which has the highest exposure to the standalone IL&FS, which is 710 crores there. So that's the big takeaway from there. From a banking point of view, we have a total of nearly 91,000 crores, of which around 60,000 crore odd is the exposure which banking sector has directly on that. And so far, no one has taken a provisioning for this contingency. Now, it may be premature to say that they have to take a thing, but the fact is that even banks have to maintain certain rated instruments, and that's the reason why the worry which is there in the financial market.
And we'll get in Shraddha to talk about the banks as well. But Sajeet, I mean, these two, which is IL&FS and IL&FS Financials, are just two of the numerous entities that have been downgraded, or in some cases stand the chance of being downgraded again, and there could be a bit of a domino effect there too.
So, one thing is very clear from the rating agencies' commentary, and that's that while liquidity is the biggest issue for them, they are not able to fund. In the near term, they will not be able to fund many of the subsidiaries, and of the top 5 subsidiaries, which account for nearly 60 to 70% of the total exposure, and being IL&FS Transportation being the biggest, there is no way IL&FS would be able to fund transportation in the near future. So there may be a chance that it may end up, if it default, it may end up in NCLT. But that's still, I don't want to be alarmist here, but the fact is that rating agencies have been saying that there's a very limited ability for them. Now, IL&FS is a CIC, which is core investment company as per RBI. It needs to maintain a leverage of minimum or maximum of 2.5 times. Now it's already at 3, so it has to sell some of the assets. Monetization is going to be one of the biggest thing. You already have LIC now as taking charge on the board of IL&FS, where Hemant Bhargava, LIC MD, is the chairman, non-executive chairman of the company. The board is expected to meet on September 15 to mull fundraising. Now that includes nearly 4,500 crores in equity and 3,500 crores of line of credit. If you go by India ratings report, they are talking about raising up to 10,000 crores in line of credit so that they can refinance some of the papers, because nearly 5 to 6,000 crores of paper is coming up for renewal in the next 1 year. So they will have to refinance some of the papers which is there. But the question is whether LIC will be willing to put so much of investment going forward. There are talks of a rights issue, but who all will participate in a rights issue, no one knows.
Yeah, the rights issue size is what, 1,500 crores?
4,500 crores is the crores. So all shareholders pitch in there.
4,500 crores. Yeah, but it's interesting, and also trying to figure out what happens if, I take on board your point whether LIC is willing to subscribe or not. The question is, would these two PSU names have a choice but not to do so, purely because of the fact that in a manner of speaking, it's a systemically important financial institution.
That's right. RBI classifies IL&FS as a systemically important NBFC, and so there will be what do you call a bailout or something which is going to happen, or it will not be allowed to fail.
Yeah.
But let's put it this way. But point is that how much of funding which will go into it, and it's a very well diversified company in terms of shareholding, and so it needs to be seen how much of public institutions are going to pitch in this entire affair.
Stay on, Sajeet, because part 2 of this story is also what happens to some of the exposed units. Now, we've discussed at length over the last 3 or 4 days about what happens to mutual funds. Nomura has come out with a report which claims that most of these loans still fall under the standard category, at least for banks, which means that slippages may rise further going ahead, depending on how this takes shape and development. Shraddha Babala is here to take us through those details and some research that she would have put in as well. Shraddha, what do you have for us?
Right, so Neeraj, what Nomura has done is that they've said that out of the 91,000 crores of debt that the group has, they've said that about 30-35% is via debentures or CPs, and it's the remaining about 57,000 crores which has been funded by banks. So we are talking about this 57,000 crores, of which Nomura has been able to estimate the bank-wise exposure for about 36,500 worth of debt. So that's the number that we are talking about over here. Now, of that 36,500 crores, they've estimated that PSU banks are holding nearly 70% of the debt. Private banks are holding about 10% or so, whereas you have LIC, any large institutions and foreign banks which are collectively owning the other 20%. Now, if you look at the bank-wise exposure to the group's debt as a percentage of FY18 loans, when it comes to private banks, they have near or nil exposure. So retail banks like HDFC, Kotak and IndusInd Bank have negligible exposure. Axis Bank, however, has a minor exposure of about 0.25% of loans. Yes Bank's exposure stands at about 0.1% or so, so not very high. When it comes to PSU banks, the exposure is high for PNB, Bank of Baroda and Union Bank at anywhere between 50 to 100 basis points of their FY18 loan book. When it comes to SBI, the exposure is very low at just about 10 basis points of its loans, and they've said that the part of it is already recognized as NPA by the bank. So, Neeraj, we have to see how this will play out for banks, but clearly PSU banks have a large exposure, and while they do have NPAs anywhere between 10 to 25%, another 1 or 2% in relative context might seem minuscule, but when you're grappling with that kind of NPAs, you don't even want another 0.5% to come through. So.
Yeah, well, tongue-in-cheek, a lot of people say, why aren't we surprised that PSUs have a larger exposure here? But Shraddha, thanks for putting this into perspective. Sajeet, thanks for putting this into perspective as well. And this essentially means that tomorrow's board meeting becomes very, very crucial. So updates on that, well, during the course of the weekend and on Monday morning as well. That's IL&FS and the whole saga surrounding it.